So we are taking a look at Tesla stock today, and there is a ton for us to go ahead and cover in today's video. We're going to go ahead and take a look at Tesla stock from a technical approach, but as well as we're going to go ahead and have a macro view on where we're at in the current landscape of the markets. As I often say, you can't have a myopic approach to the markets. There's several different factors that contribute to the direction of the overall markets and specific stocks like Tesla. And this is why I say you want to have a multi-dimensional approach, and you have to look at several different data points. If you just look at the charts and look at squiggly lines, you're not going to have a full picture idea of what's currently going on. And so this is why I cover several different topics when we're taking a look at specific stocks like Tesla, right? Because everything is interconnected. Now, the first thing that I want to go ahead and cover is really the major theme that has currently been affecting the financial markets, which is the unfolding trend of supply and demand imbalances in the United States Treasury bonds. And this is why we're seeing this higher interest rates on yield. So let's go ahead and pull this up right now. For a while now, I've been pretty much preaching about this or sounding like a broken record about the 10-year Treasury yield. So I hope that those who watch my videos very often can forgive me, but there's a reason why I have to really talk about this, right? And this is because it's really important. We are seeing the 10-year Treasury hit levels that we have not seen since 2007. And one thing that we have to understand is that when the 10-year Treasury is really high at these levels, offering these yields, it's very unattractive to have money invested in the stock market. Now, of course, as a individual retail investor, I am still long-term bullish on Tesla. And I have to say this because there's always that one person who comments in the comment section below and doesn't understand what I'm saying. So for those of you guys, yes, I am long-term bullish on Tesla, and we'll go ahead and talk about that. But the reason why when the 10-year Treasury is high, it's bad for stocks like Tesla. I'm not saying that I'm going to sell Tesla. Of course not. But we have to understand that a lot of financial institutions like to move capital around when the 10-year Treasury is offering these attractive levels over here, these yields, right? And we have to understand that FINRA themselves they've identified that 70% of the volume in the markets is made up by institutional investors. So think about your hedge funds, think about your fund managers. Those are the people who are moving billions of dollars around, and they really move the markets around. So this is why, yeah, the 10-year Treasury is up high. It doesn't mean I'm going to sell all my Tesla and put it in the 10-year Treasury, but it doesn't matter what I do because I'm just one single investor who, yeah, I've accumulated some shares of Tesla since 2017, and I am adding it to Tesla still, but I am just a minuscule amount of money in regards to what actually moves the market. And so this is why we have to understand when these 10-year Treasuries are high, especially how we've seen that in the beginning of 2023, the markets rallied up tremendously. Think about the Magnificent Seven, like Amazon, Tesla, Apple, Nvidia, Microsoft, Meta. I mean, all those stocks have done very well in the first half of the year. But now we're seeing things get a little bit shaky, and we're also seeing the 10-year Treasury up this high. And so with a lot of fund managers and institutional investors, these hedge funds, right, they're moving their capital around, getting it out of stocks and moving it into the 10-year Treasury. And that's not necessarily good for the stock market, right? Now, we also have to talk about something else. Now, this is specifically the demand side and the deglobalization that is causing less of a demand for treasuries, which is why we're seeing treasuries go up. So one of the things we have to understand is that traditionally, China has been one of the largest foreign holders of U.S. debt. And this is important to understand because they have been buying treasuries traditionally for a long time, but we're seeing this decoupling dynamic of this relationship where we're seeing a lot less of Chinese investors really purchase the foreign U.S. debt, and this reduction in demand is what's partly contributing into the higher yields of the U.S. Treasury bonds. But there's several other factors. That's just one factor, right? Another factor that we could talk about is that in addition to that, Japan is likely to buy less treasuries as the Bank of Japan, which is basically their central bank. Over here we have the Federal Reserve. Well, they have the Bank of Japan, and they're gradually tightening monetary policy over there. And this is a trend that's unlikely to reverse. And so their interest rates are going up. And so their investors are less likely to to buy our debt because they also have to go through the whole spread of currency exchanges. And so although our yields are higher, there's still the risk of, the yen and our currency. And so it's much more difficult. And so it's more attractive right now for them to just invest in their own treasuries rather than buying our treasuries. And so that's one issue that's currently taking place. But I also want us to pay attention to a major event that just recently took place. So let's go ahead and hop onto Twitter. And this is the official Twitter for the White House. Now, just a day ago on September 30th, they said that extreme House Republicans are tripling down on their demands to go ahead and take away millions of dollars from hardworking families that rely on this government spending. Now, one thing we have to understand is that the White House, we know that I don't want to get too political over here, right? But we have to understand that there's one dominant party that's in the White House. And so they're going to call the other party extreme, the extreme House Republicans. And I want us to remember this because we're going to talk about this further on in this video. But the whole idea is that recently, there's been talk of a government shutdown where we haven't decided on what policies to do, whether, we're going to go ahead and cut or we're going to go ahead and increase taxes. And so because of this deadline, the White House just yesterday was tweeting almost every single hour that, hey, we have 12 hours until a government shutdown, 11 hours until a government shutdown, 10 hours until a government shutdown. And they were kind of blaming the right, saying that, hey, they're not cooperating. They want us to really cut spending. This is going to impact a lot of people. And so we were going to go into a shutdown. And I made a copious amount of videos talking about how a shutdown would potentially be bad. But what we saw is that we got an update that when 9 hours left until a government shutdown. Now, this was still yesterday. The House has voted to keep the government open for 45 days. Now, this is temporary, so they still haven't came up with a decision, but both parties have agreed that, hey, let's go ahead and temporarily just keep spending money and keep things as they are for 45 days until we come to an agreement. Now, here's the problem, guys. We have to take a look at the federal debt, and this is the total public debt as percent of GDP. And we're seeing that government debt has just been going up and up and up. It's been getting worse. Now, this is really bad because from the supply side, the supply of United States treasuries is increasing as the U.S. fiscal deficit grows, right? And so the United States Treasury needs to sell more bonds to finance government spending. In addition, the Fed is also currently implementing the balance sheet reduction program known as quantitative tightening, right? And so as interest rates increase, the interest payments on outstanding Treasury bonds can continue to become unsustainable. And let's go ahead and go look at this, right? And so what this means is that we could require an even higher supply of bonds, all while demand is decreasing. There's several factors on why demand is decreasing. We have China, we have Japan, then of course we have government spending. And so we need to issue more treasuries to finance this government spending, but we don't have as much demand for these treasuries. And so that's why, there's this inverse relationship with bonds or these treasuries where when the price goes down, the yields go up. And we have to understand that when the yields go up, it's also bad for the economy because a lot of financing, a lot of loans are pegged to the 10-year treasury. Think about when you're going to finance a house, when you're going to get a mortgage. A lot of times it's tied to what the 10-year treasury is doing. And so when we're at these high levels, well, that's not necessarily good. That's why we're seeing credit tightening take place. Right now, it's a little bit harder to get a loan. This is why real estate agents are leaving the housing market, right? They're not paying their dues to the National Association of Realtors because right now people are just not, the volume of house sales is decreasing. Right? And that's a different story. We could go ahead and talk about that because I am also a licensed realtor in the state of Florida, but that's for a completely different video to talk about the housing market. I want to keep this really just focused on Tesla stock and where we're at in the economy. And so when we take a look at this tweet right over here where it says extreme House Republicans, right? The extreme right position to cut government spending is not really that extreme because rising long-term rates are really a major danger to the U.S. economy and the U.S. financial markets. Again, going back into this, if this is high, it's bad for stocks and it's also bad for lending. And so what we have to understand is that the government shutdown has been averted for now on this strong bipartisan support from both parties, but in 45 days, the U.S. Congress is likely to pass a bill to fund the U.S. government for the next fiscal year. And again, it's going to need strong bipartisan support. And so this is definitely good news for the economy temporarily, for the affected government employees and everyone else who relies on the government not shutting down. and of course, the good news about the government not shutting down is that we're still going to have more data. For example, I always say that we want to stay data dependent to understand what's going on in the markets. And this week we have a lot of government job data coming out, and this would not have came out if we didn't have the Bureau of Labor Statistics opened, right? Because if we had a government shutdown, we've heard from several Fed members or FOMC members say that they were going to have to navigate in the dark, where they're going to have to just decide on what to do with monetary policy without having data out there. And so it's good that the government shutdown is being averted, but at the end of the day, this is not necessarily good news for the financial market. Specifically, the long-term interest rates are likely to continue to rise due to unsustainable debt levels, and consequently, the stock market is likely to continue to fall. Now, we finally get back to Tesla. I know we talked about a lot of different perspectives as what's going on in the current landscape, and I know some individuals, they just only want to hear me say or rub this magical crystal ball on what I think is going to happen to Tesla. But while I'm flattered that a lot of you guys think I do have a crystal ball, that at the end of the day, it's much less mythical of my approach to the markets, and actually it's much more of just looking at the data. And so right now, I believe that we may see a little bit of relief to the markets because we avoided a government shutdown. That's, pretty good in the short term. But again, it's not a major victory. So we're entering into Q4. And there's a couple of things that is taking place right now, right? So, are taking place, right? So the first thing that we want to pay attention to is that student loan debt is now having to get repaid. And so this is impacting millions of Americans who have a median payment of like around $350 that now they have to budget into their monthly expenses. So we're seeing that there's going to be more signs of continuous weakness for the consumer. Now, when we're taking a look at Tesla, right? Let's just primarily only look at Tesla from a technical perspective. We see that we're at this area right over here, and this is a very pivotal area, and I want to go ahead and highlight this. So right over here, there's a lot of volume relative to price right over here, and this is on the volume profile. Now, this is different from your traditional volume relative to time. And so when there's a lot of volume relative to price, that means that there's a lot of exchanging at this price level between buyers and sellers. This is where we see areas of resistances or supports or consolidation. It's not until we enter into low areas of volume relative to price where we see big spikes up. And so this is why last time we were around this area, we saw that Tesla went up, it went down, it went up, it went down, it went up, it went down. And it wasn't until we had that catalyst a couple of weeks ago where we had one of the analysts, a sell side analyst on Wall Street, put this good piece out saying that, hey, we need to stop looking at Tesla as just an automobile company and really look at it as kind of like a SaaS company, kind of like Amazon, where most of its revenue doesn't actually come from delivery of packages. It comes from a lot of different, SaaS type businesses, right? Or what they do as far as recurring revenue. And so we saw Tesla stock kind of push upwards, but then as it started getting closer, we got to see a rejection over here, which has been an area where we've seen Tesla stock reject for quite some time at this descending trend line. So one of the things I said is, okay, well, Tesla's rejecting. Now the next thing we want to pay attention to is, do we get rejected right over here when we start looking at the volume relative to price? And we saw Tesla kind of fall down. But then as Tesla fell down to this area, I said, hey, this is pretty scary because there's less volume relative to price. But we saw the buyers come in. And how do we know that the buyers came in? Well, we saw this wick over here. So there was some demand and Tesla went up. But of course, the next day it got rejected right around over here where there's little volume relative to price. Then it fell down. And of course, as it fell down to these low areas of $233, we saw the buyers once again step in. And Tesla once again entered into this area where there's a lot of volume relative to price. And so we're kind of moving sideways. We pushed up a bit. But one of the things we have to understand is that if we get any more negative news, then this could possibly push Tesla right back into this area where there's little volume relative to price. And last time we saw that when Tesla was selling off heavily, we saw these big candles going downwards. And it wasn't until around the 215, 213 area where we saw the buyers kind of come in, and we finally saw that reversal in price. And so one of the things we have to understand is that not only from a technical perspective do you want to look at Tesla, but what do we have from a fundamental perspective? Well, going into this week or the week after, we're going to get an update on the delivery numbers for Tesla. And so we're going to get like a little bit of a snippet, a preview on what Tesla is going to do for their third quarter earnings. Again, we're entering into the last quarter, but we're going to get the earnings for Q3. And many are expecting that Q3 isn't going to be that strong, especially because we've been seeing weakness in China. We talked about that in a couple of previous videos. But next week or this week, sometime around this time period, we're going to get an update. And so again, if we have bad news for Tesla, that could push us into concerning areas. Now, as you guys have heard in the beginning of this video, I am long-term bullish on Tesla. And so if Tesla continues to fall down, well, I will follow the same game plan I've been doing for a while, where once we see, I don't just buy any dip, right? A lot of people just say, oh, I'll just buy the dip. Well, the dip can always get dippier, or another stock market term is that you don't want to catch a falling knife. And so if we do see Tesla stock kind of experience much more weakness in for Q4 based on the data we're seeing in Q3, well, what I'm going to be doing is not just buying at every single dip, but waiting for that major sell-off and then waiting for that confirmation of an uptrend, and that's when I'll buy in. This is the last time I bought into Tesla, and so if we see Tesla fall down, I won't get too worried because, again, I do invest in Tesla in the long term, and I'll just wait for that pivotal point. Now, if you want to know when to buy at these areas of confirmation, I definitely have another video on this channel. Consider subscribing, by the way, if you're not, and look out for that video on this channel where I talk about how to identify confirmation in the stock market, and so that's what I'm going to do. Now, if Tesla does fall down, not only am I going to wait for that area to buy in my long-term portfolio, but I also hedge in my short-term portfolio by just trading Tesla, and I may short Tesla as it's falling down. Again, it's not because I'm not bullish on Tesla. People get this wrong almost every single video I put out where they just call me like this Tesla bear. Trust me, I'm not Gordon Johnson who thinks Tesla should be $24 a share. I think Tesla in the future is going to be much more, like almost 10 times more where we're at currently, right? That was just me throwing a random number out there. But for the short term, yeah, I like to short Tesla just to hedge my long-term position. Doesn't mean that I'm bearish on Tesla. It's just the landscape that we're currently in may not be that favorable for Tesla. And while Tesla may be falling down in my long-term portfolio, I may like to buy puts as an insurance, so I make money as Tesla's going down to hedge my portfolio, or I may sell calls, right? That's something that I've talked about a lot of times in this video. There's several different ways, or on this channel, there's several different ways to approach the market. You just have to find whatever you see value in. And so this is why, I always say you shouldn't just copy what I say or any fund manager or anyone else on Twitter or YouTube. It's always what you see value in. And so if you find value in buying Tesla in at this very moment, then all power to you. I'm just saying right now, I don't look forward into buying Tesla at the current moment until we see more selling pressure or until Tesla breaks above this descending trend line. Then I'll definitely add more into Tesla. Why? Well, that's because it'll signify that we're, entering into a new trend. We're breaking this downtrend and going into an uptrend. So those are the areas I'm going to be looking for Tesla over here. And then, of course, what we do right now, as we may have some more negative data coming out. But, of course, we have to stay data dependent and see what the delivery numbers look like coming out next week. But with that said, guys, make sure to like, subscribe to this channel. Check out the links in the comment section below because I'm going to pin a comment to join my free weekly market pulse insights where every single Sunday, I just sent one out already, so you may have missed that one. But if you're new, you'll get my weekly emails I send out every Sunday where I talk about what's going on in the overall market. So definitely check out that pinned comment in the comment section below. And with that said, I'll see you guys on this next video right over here. Take care, guys.